All right, Amazon is about to drop a massive earnings report. And while the numbers are bigger than they've ever been, the stock itself has basically gone nowhere. So today, we're going to deconstruct exactly why. We'll look at its core growth drivers and the massive risks that have investors sitting on the edge of their seats. So first, let's just talk about the sheer scale here. With this next report, Amazon is set to officially cross the $700 billion mark in annual revenue for the very first time. I mean, that is just a staggering number that puts it in a tiny club of global giants. But even with this incredible milestone, something's a little off. Yeah, it's kind of wild, right? Despite all this massive, record-breaking growth, Amazon stock has been stuck in neutral for the past year. Investors just aren't rewarding the company. So that's the big question here. Is this a sleeping giant that's about to wake up? Or is its incredible size actually starting to hold its stock back? That is the dilemma we're digging into today. Okay, so how are we going to figure this out? We've got 5 key stops on our roadmap today. First, we'll look at the baseline expectations. What does its report card even need to say? Second, we'll break down the 3 growth engines that are actually powering this whole machine. Third, we're going to get into its insane spending spree on AI. Fourth, what kind of new threats and old risks are hiding out there? And finally, we'll tackle the investor's dilemma. Is this stock a buy or is it a trap? All right, first up, the report card. You have to understand this earnings release isn't just about one quarter of business. Think of it like the final exam for Amazon's entire year. Wall Street is watching every single number. And believe me, the stakes are sky high. Okay, so this table right here, it actually tells a really fascinating story. On one hand, Wall Street is expecting some powerful revenue growth, 13%. For a company this huge, that's amazing. But then, look at the earnings per share. That's basically the profit. That's only expected to grow by about 6%. And that gap, that difference between sales booming and profits kind of lagging, that's the real mystery we need to solve today. So to get to the bottom of that profit mystery, we have to pop the hood and look at the engine. Because, you see, Amazon isn't just one single company anymore. It's really 3 incredibly powerful, distinct engines, all firing at the same time. This chart breaks it all down for us. You can see over 61% of the money still comes from its North American retail business. Yep, the boxes that show up on our doorsteps. But what you really need to watch are the other 2 pieces of the pie: international retail and especially the super profitable Amazon Web Services, or AWS. Those 2 are absolutely crucial for the company's future profits. Okay, engine number 1. This is the OG, the one we all know: e-commerce. It's the foundation of the entire Amazon empire, that massive online store that completely changed how we all shop. For that all-important holiday quarter, this is the number Amazon itself told Wall Street to expect. We're talking about more than 11% growth from last year, which just proves that the core retail engine is still unbelievably strong. So why is it still so dominant? Well, it's pretty simple, really. The company's main strengths are still second to none. Its massive selection and its ridiculously fast delivery speeds. That's still the gold standard that every other retailer is desperately trying to catch up to. It's what keeps us all locked into that Prime ecosystem. All right, let's talk about engine number 2. And honestly, this is arguably the most important one when it comes to making actual money: Amazon Web Services, or AWS. This is the cloud computing platform that runs everything for countless companies, from tiny startups to massive ones like Netflix. And man, AWS is absolutely on fire right now. After a while where its growth seemed to be slowing down, it just shot back up to over 20%. And for investors, you've got to understand this is a huge deal. AWS isn't some side project, it's Amazon's main profit machine. So what's lighting this fire? It all comes down to 2 letters: AI. The boom in artificial intelligence is creating this incredible demand for the kind of raw computing power that only cloud giants like AWS can provide. This is a massive tailwind blowing right into Amazon's most profitable business. And that brings us to engine number 3, which is kind of like Amazon's secret weapon, and it's growing like crazy: advertising. Every time you see one of those sponsored listings when you're searching for something, that's part of a gigantic high-margin advertising business. In just the 3rd quarter, this business pulled in nearly $18 billion. Just to put that number into perspective for you, that's more money in just 3 months than a ton of Fortune 500 companies make in a whole year. It's just massive. And its growth is speeding up, which means it's becoming a huge contributor to Amazon's bottom line. Okay, so we've got these three powerful engines, and they're all firing on all cylinders. But, and this is a big but, this brings us to the central conflict in the Amazon story right now. The company is making a colossal billion-dollar bet on AI, and a bet that big comes with some enormous costs. I mean, just look at this chart. It says it all. Capital expenditures, or CapEx, which is just the fancy term for money spent on big physical stuff, is projected to just skyrocket. And where is all that money going? That huge leap is pretty much all about one thing: building out the massive data centers and infrastructure needed to power the AI boom for AWS. And here's the catch. This is the classic trade-off, right? This is why sales are growing so much faster than profits. Amazon is basically saying, we're going to take a hit on profits today to build the empire of tomorrow. And for investors, the big question is, will that bet actually pay off? Of course, no company, not even a beast like Amazon, gets a free pass. Beyond those internal spending pressures, there are some pretty big threats from the outside and risks from the inside that could really throw things off course. And look, these aren't just little bumps in the road. We're talking about serious challenges. You've got regulators all over the world asking tough questions about Amazon's power. The competition in cloud computing from Microsoft and Google is absolutely brutal. And, like we just saw, that massive AI spending is putting a ton of pressure on profits. But what's maybe the most fascinating thing to watch is how the whole game of e-commerce is changing. See, Amazon perfected the search and buy model. You know what you want, you search for it, you buy it. Simple. But now you have new players like Temu that are competing purely on super low costs. And then you have platforms like TikTok Shop that are all about discovery-driven shopping, where you're not even looking for a product, it just finds you through your social feed. It's a totally different way to shop, and it's a direct challenge to the very foundation Amazon built its entire retail empire on. Okay, so that brings us to the big finale, the investor's dilemma. We've looked at the growth engines, we've looked at the massive AI bet, we've looked at the risks. So, when you put it all together, what's the final verdict? What's the bull case versus the bear case for the stock right now? Okay, the case for being bullish? It's pretty straightforward. AWS is roaring back because of AI, the advertising business is a high-profit rocket ship, and the core retail business is as solid as ever. That's why most of Wall Street rates the stock a strong buy. But then you flip the coin, and the reasons to be cautious are just as strong. The stock's been dead money for a year, it's pretty expensive based on its valuation, all that spending is burning through cash, and those competitive and regulatory threats are very, very real. So at the end of the day, this is the real question that this earnings report is all about. You've got a company with all its main engines firing, but it's pouring all its profits into this gigantic bet on AI, all while facing down new rivals and old risks. Is this a brilliant move to secure its future dominance, or is it just a burden that's too heavy for today's investors? This report won't just be a spreadsheet of numbers, it's going to be the next big clue to answering that very question.